and gentlemen, hello and welcome to Nadex. My name is Philip and I will be once again your presenter for today's webinar. And just as always, I would appreciate a very short yes or why in that small questions box that you can see to just let me know that both the audio and the screencast are working properly and that you guys can see the screen and hear me well. Through the course of this webinar, if you have any questions, please put those questions in that box. Don't be shy. We're here to learn something together. And I'll do my very best to answer those questions as we move through the webinar. And thank you very much for everybody who have put that small yes for that technical check into that box. Really appreciate it, guys. Just as always, today's session is scheduled to run for about half an hour. And before we get started, there are, of course, our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them carefully and make sure that you're okay with them. Essentially, this says that trading, of course, involves risk and that you should understand those risks and the risk associated with the instruments you're using before you are getting active in the market. As neither Traders Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live part of today's webinar. We will be looking at the live markets together in real time. I will tell you what I see on those charts and how I read those, how I read price action, but it's really just my interpretation. It's never a trade recommendation. It's always just for educational purpose. So please make sure you're okay with that. And that being said, let's have a look at the risk warning from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's just have a look at today's agenda, and our regular attendees know it by heart now. We want to look at the markets together. We want to approach the markets from a rather strategic point of view, which means we're looking for a certain way price action behaves. We're looking for the same patterns over and over again, because only if we trade those markets in the same way all the time, that built-in edge for our trading strategy can actually manifest itself and result in probably and potentially rewarding payoff scenarios for our trading. We want to trade the same strategy all over again and over again and over again. We do not care about the outcome of one single trade. It's all about a large sample set of trades, because then probabilities can start to work out and we will probably get that positive expectancy of our strategy to actually work. Everything that we try to achieve with our technical analysis is we want to stack the odds in our favor. And if you just think about it, and let me just switch over to my charts here. Every time we place a trade in the market, we run the risk of losing. That's just the nature of the game. And you could just flip a coin and probably you could win 50% of those trades and you can lose 50% of those trades. However, this is not very rewarding. We want to have the situation where over a large sample set of trades, we should have a certain probability to come out ahead. And what we're trying to do here is we want to try and apply technical analysis. We want to identify certain characteristics of price behavior, which makes it a little bit more likely for our trade to work out in a way that we anticipate than not. And it's not about having only winning trades on. That's the famous holy grail of trading. That's what everybody is looking for. Trading doesn't work like that. You will always have losing trades. It's just part of the game. You have to accept that. What you should try to achieve, however, is that over a large sample set of trades, you win more trades, or you have more potentially profitable trades on than losing trades. And the next thing is that you want also those potentially profitable trades to be larger than the losing trades, at least the sum of those potentially profitable trades and the sum of the losing trades. Being profitable more often than not And if you're profitable, being larger profitable than the offsetting losses, all this coming together should give you a positive edge for your trading. And this is what trading in the end is all about. So let's have a look at the market here. And we're looking once again at the Australian dollar against the Japanese yen. And I would like to start with this analysis here on the lower time frames. And let's have a look here, for example, at the 15-minute chart and just zoom out a little bit. Now, just recently, when I was preparing for that session, we started to identify certain levels in price action, and now prices obviously pulled back once again. The idea here is that we might think price might be going lower, and let's just go to a 1-hour chart here, and let's just put in one of those levels here, and we could be going for a level like that here, for example. Now, the idea is we get several tests of this level and price is breaking below this level, and we want to gain some further momentum here. We want to see that price actually is going lower. And however, what we tend to see here all the time is now we are back again here in an uptrend on the hourly chart. We start to see a series of rising higher lows. And even if you think price might be falling lower here, the next thing to notice that our indicators here, we have those indicators currently confirm that those are new higher highs here on this price level on the hourly chart. Now, price is moving higher here. Does this mean this is an uptrend that we should be trading right now? I don't think so, because if you look what the moving averages are still doing here on those lower time frames, they are still pretty much here all over the place. We are still sitting very close to this level, and that this is indeed a rather important level here for the hourly chart can be seen. The price has reacted to this level here now several times. And the funny thing is, let's zoom in again a little bit here. Once price has broken above this level, it immediately came back to test this level once again, just to continue higher. And once again, what's price doing here now? It's coming back to test this level one more time. I think one of the most important parts of trading is to actually put those levels here on your charts. When I first learned about those strategy and that approach to trading, I really was not that appreciative of those levels, because come on, in the end, it's just a silly line you put on that chart, and anybody can put it there, and probably everybody will put it in the same place. But that's just the power. Everybody is looking at the same lines. Now, if we started to put in some kind of sloping trend lines here, there are a ton of different ways to draw those trend lines. And if you do the exercise and put them in, you will soon realize that they, once they are broken, it's not really that powerful. It's not really that indicative of what will happen next once it's broken. And with those levels here, those horizontal lines of support and resistance, we feel that those have far more predictive value. And it's once again, it sounds silly, but it's just a horizontal line. But guess again, this horizontal line is a leading indicator. We have lagging indicators when it comes to trading, and we have leading indicators. And horizontal lines are definitely leading indicators. Why? I was able to identify this level here back in the day, 23rd of November. Now, price since came back. I knew once I have identified this level here after the roundabout second touch, that if price is approaching this level, it will probably react to that price level again. And I was able to identify this level back here in the day. So when price finally came back here, was I sure the price will bounce off this level? No, I wasn't. But there was a certain probability that price will react to this level. And if you remember how we entered today's session, it's all about stacking those probabilities in our favor. So if I'm able to identify in advance a certain area on the price area on that chart where price might be reacting to, I have an advantage. Does this mean I'm right all the time? Absolutely not. But if I'm right more often than wrong, I've achieved my mission. You can trade a trading strategy successfully in the market if you have just a consistent win rate of 51% versus 49% loss losing trades. That edge doesn't have to be big. It just has to be an edge that you can consistently apply over and over again. And you want to use leading indicators as much as possible. So horizontal lines, price reacting to this level here. And one of the most important things that I'm also seeing here is, if we have a look at the 4-hour chart, for example, once again, we think price has touched this level once, twice, a third time. Now we are about to break below this level. Isn't this a fantastic trading opportunity here for a trade to the downside? Trend continuation to the downside? I don't think so. I think this is a pretty poor setup here with this regard. Why? Yeah, I've just told you guys we have this level being tested here several times, and finally we get the breakout. But you see, price isn't really following through. What made me weary of that setup? What made me say, I don't like that setup, let's move on to the next market? Well, the first thing that we want to see here, and let's make it larger again, those tests here, that's what we want to see for a breakout trade. We want to see that same level being tested several times unless we get finally the breakout to the downside. However, what we always want to see here is convergence of our indicators, which means if price is coming here back to a test for this level for the second time, I want to see that my indicators are showing me convergence, or at least no big divergence. What is divergence in this context? Let's have a look here. And now we're using a sloping trend line. We compare this point in time here with that point in time. And obviously it's the same test of the same level. So price is testing for another lower low. It doesn't make the lower low. However, it's sitting here really close at that level. If we take the same point in time here and compare it to where MACD is currently here at that point in time, where price went for the second test, I already see a huge divergence showing up. And it's the same thing if I'm looking here at RSI. RSI for the same point in time, again, is showing me divergence. Divergence, price makes new lower lows, or is close to making new lower lows, and my indicators just don't follow suit. My indicators are making higher lows. That's bullish divergence showing up here on that chart. And once we went here for the third test, once again, you see again, very, very well pronounced divergence setting up here. And not only that, we want to see if price is about to break out to new lower lows, which it did here on that candle. Do I think that it's likely that my indicators are able to make new lower lows as well? And just see that huge difference here. That's where MACD was for the first test. Here was MACD for the second test, and see how far away those candles currently are. And doesn't really, it's not convincing. It's not, that second level of confirmation is just missing. Yes, price is breaking out, but I feel that there's so little momentum here on that breakout to the downside, where I think it just doesn't make any sense to actually take the trade here and go in that direction. Now, Susan is asking about the leverage to trade Forex, and my suggestion would be, let's just quickly finish the analysis of this market, and then we'll jump over to the platform and I show you why I don't care about leverage at all. Because it's not about leverage, it's all about risk. You want to be sure that you have a proper risk management plan, and I can show you easily on the platform how easy it is to set up a risk management plan and follow that risk management plan here on Nadex. So Susan, just hang with me for a moment while I finish here that analysis of the Aussie against the Japanese yen. So first warning sign, we have divergence here on both MACD and RSI, and I'm not really interested. Next thing, we're looking at the 4-hour chart. Let's have a look here at the 1-hour chart. Sorry guys, I want to look at the daily chart. And once again, I see that I'm here in this area and I'm too far away from my moving average sell zone. I don't like it. I think this market is overextended. What is overextension? Well, you see price is moving away, and let's just move a little bit here to the left. You see price is moving away from my moving averages and it's pulling back. And here I'm getting my small bullish candle setting up in the buy zone, close to the buy zone, and price continues to push higher. It's overextended again. That overextension is being fixed. Price is pulling back towards the moving average buy zone. And that's the pattern that we're always seeing. Prices at price equilibrium levels, it's moving away to overextension and it's coming back. I do not want to enter an uptrend at any cost. I want to have a good deal when I enter that trade. I want to have a good price, a good trade location. And I know that I can use my 10 and 20 period moving average, which we call the buy zone in an uptrend, the sell zone in a downtrend, in order to help me identify that areas of good prices, of good deals. And if I look at what the market is doing right here when we break out, I feel that we have been just moving away from those price equilibrium levels for too far. And that's the second biggest thing where I say, no, I'm not interested in that trade. First, the clear-cut divergence on my trigger chart, and on the confirmation chart, I'm seeing that overextension. And I just feel that it's more likely the price will come back, take a pause, gain some breath, and then continue lower again. But is this now the proper time, or would that have been the proper time to actually place a short trade here on the price break? I don't think so. Just look at the divergence. One of the major parts of one of the biggest rules and checkboxes that has to be ticked in order for a momentum breakout trade to actually work. If you want to learn more about those strategies, and you can relax, I don't want to sell you guys anything, or maybe a little bit, please consider signing up for those Nadex webinars here during December, because during December we will be running our advanced course where we teach you guys the ins and outs of those strategies. We have two strategies. Our trend flow setup, where we want to trade a trend continuation to the downside when price pulls back to price equilibrium levels. High probability setup for price to continue in the direction of the trend. And the next thing is what we've been discussing here, and ultimately why I showed you why this isn't a setup worth trading. It's our momentum breakout strategy. You can learn all about those strategies here in those webinars, which are completely free for you to attend if you have an account here at Nadex. And so for that reason, yes, I want to sell you. I want to get you a time to attend those webinars. No, you don't have to quit with any money. That's all been taken care of. It's a great level of education that you guys can get here completely for free. So please consider signing up for those webinars. Now, that's the market. I don't think it's a good trade here that we have right now. And yeah, so much for this analysis. Now, let's jump over here to the S&P 500. And I'm looking here again at a 4-hour chart. We see price has been trading against this level. Now price is just shooting higher. Once again, way too overextended here on the 4-hour chart. Let's have a look here at the 15-minute chart. And you see, again, way too overextended. But that pattern, that pullback is happening here all the time. And this is just what I would be waiting here for now. If I want to place a trade here on the S&P 500, I would be waiting for a pullback. Let's have a look here at a 5-minute chart, and you see it's closer to our price equilibrium levels, but it's moving away too far as well. Overextended on the 5-minute chart, and the 1-minute chart, by the way, that would be way too fast for my own taste and for my own liking. That being said, that market currently is definitely moving higher. I don't know how long it will go. Nobody knows for sure. Let's just jump over to the platform, however, for a moment. And let's just see how this could be traded here. If you think price might be going higher, and let's just have a look at those other expiry cycles. And let's pick up, if I want to trade a 1-minute chart, I would be probably looking at options with a shorter expiry, shorter time left until expiry here, 40 minutes, 50 seconds. Then those options, it will be decided if those options are in the money, which means the S&P 500 will be trading above the strike price here. And then we have a payout of 100, or if it's trading below the strike price, the payout will be 0. Now, I don't want to explain you guys the ins and outs here of those Nadex binaries. It doesn't really make, I'm pretty sure you're well accustomed to those. What I, however, want to highlight with regard to Susan's question, considering the leverage that should be used for trading any instruments, and it doesn't really matter if we look here at forex binaries or look at those on the S&P 500 here. Let's just pick one contract here. If you think the market might be going higher, and you think it's likely that the market will be trading above the level of 2,617 and 0.50. So price will still have to move a few points here. Now, if you think that is a good buy, which I do not suggest by all means, it's just for demonstrational purposes here. So if I'm trading one contract here, I have to buy this contract now for $39.50. What is my risk on that trade? If everything goes wrong, I can lose only those $39.50. How big should you trade? Well, you have to decide that on your own. The way that I like to trade is I look at my account value. And by the way, this is a demo account here, so just for the sake of examples, my account value here is round about $22,000. My personal take, which is in line with many experts and all of my colleagues here at Trade with Precision, I'm willing to risk 1% of my account if one trade goes wrong. So this means from those $22,000, I'm willing to risk 220 on one trade. That's the first and most important thing that I need to know. If the trade goes wrong, I'm losing 220. And that's the perfect thing about applying good risk management here at Nadex. I know my risk completely upfront. I know no matter what happens, the cost to enter the transaction is the maximum that I can lose on any one trade. And now I'm willing to risk 220 on one trade. So the question is, how many contracts can I now trade to risk that 220? Well, I would be just clicking up and increasing my position size, and you see that that maximum loss number immediately picks up. And so I know that if I was to trade 7 contracts at the current price level, my maximum loss would be $215.25, which is just below my 1% risk level that I'm going for. Susan's asking, is what you've been lecturing from 12 to 12:30 p.m. It's all about forex. Susan, our strategies are any market, any time frame, which means what I'm looking for on those markets, I'm looking for the same price patterns in all different markets. I don't actually care what the market is, and I don't care what the time frame is, because if you have a look at what the S&P 500 is doing here right now, it's in an uptrend. I see my fanning moving averages. I see my fanning pattern. I see that price is moving away from those moving averages, and I see it's pulling back to. It's giving me small bullish candles. I'm looking for levels here. It's the same thing that I'm always looking for, independent of the market, independent of the time frame. I'm applying those very same indicators, those very same strategies, that very same principles of risk management and position sizing. If it's a weekly silver chart, or if it's a 1-minute S&P chart, or if I'm trading cable, British pound, US dollar, it's the same thing all over again. I'm trading price action, I'm trading the action of market participants. And it's one size fits all, pretty much as that. Now, many questions coming in, just a second. Danica, and I hope I pronounced your name correctly. If not, I'm really sorry. Would you risk that 1% on every trade, or just if you lost the previous trade? No, it's the same thing. And many people think if I see my perfect setup, I want to risk more. I want to have it's the perfect storm, it's the perfect setup, I have to risk more here. No, you never know if that next trade is a winning trade or not. You just don't know. It's the same thing. People go to Las Vegas, to the casino, and think, wait a minute, now we have seen red at the roulette table 5 times in a row. Surely it has to be black next time. If you think about it, those events are completely independent. They are not connected to each other. The probability that red will come up next time is just the same as if black was about to come up. And those probabilities won't change. If red has come up 1 million times in a row, it's the same basic probability. And with trading, it's the same thing. I'm just creating my roulette wheel spins here by putting on my trades. And I know that I should have an edge with my trading, just like a casino, because of my strategy. I have the ability to identify potentially helpful factors on my chart which should tweak that winning probability a little bit more in my favor. I'm now just talking about my numbers from my personal trading from last year. And of all the trades that I did there, I had about a 65% win rate, which means I hit my first profit target in about 65% of all my trades. That's just me. That's my personal trading statistics. I do not suggest that you have the same numbers here if you're just getting started, but you can get there. You can move towards there. And the idea here is that if I'm able, out of 10 trades, 6 could be going in my favor and 4 would be losses, and I manage the risk on those 4 losses, I can have a very nice and decent life of with my trading. That's the most basic idea. And as I never know if that next trade will be now a potentially profitable trade or a losing trade, I have to stick with that 1% risk all the time. I hope that explained that. Denika, thank you very much for the feedback there. Nick is asking about a way to sell on the Nadex platform. Just a moment. Great question. We get that question all the time, and therefore I would like to stick with that question for a moment here. Can forex actually make living income to replace my job? Guys, please have realistic expectations. If we are risking just 1% of our account, so let's just assume we are sticking here with our example account of around about $22,000. If I place a successful trade, and let's just say I place 1 successful trade per week, what's my income then? $220. Yes, it will start to compound and will get bigger over time, but that's a realistic way to approach that calculation. So the question is not, is one certain market suitable to help you to make a living from trading the markets? The question is more, how much money can you start with? And can you first develop that, that experience, that routine to trade those markets successfully? We do not make any suggestions. However, I really would advise here at that stage, have realistic expectations, give yourself time to learn the markets, learn to trade, learn the platform, learn those contracts. And once you've mastered that, trading those markets is a perfect thing to do on the sideline. Trading is a lifestyle choice. You don't have to trade full-time. I could be trading full-time. I don't want to do it. I want to do different things. I don't want to be glued to my screens all day. It's just not worth it for me. I can apply those same strategies on higher time frames and trade those markets from there. You have to find what works for you. Yes, you can make a living trading the markets, but it takes time and it takes a certain account size to do that. And it's completely asking for trouble, at least in my eyes, in my opinion, if you think that I have just funded that account with $5,000 and I'm trading that account now and I will turn that account into $1 million by the end of the year. Can it be done? Yes, from a mathematical point of view, it surely can be done. Is it realistic to do that? I don't think so at all. So please, guys, be realistic, think about risk management first, and give yourself time to learn and adapt to the markets. I hope that makes sense. We still got that question on selling on the platform, and let me just quickly scroll up. Question in the same regard. Ernest is asking, when is the ideal time to trade? The time when you have time to focus on the markets. That's the perfect time to trade. Pick the market that you want to trade. Learn more about that market, about its rhythm, about its cycles, and then focus on those markets. And just don't force to trade if your husband or your wife or the children or the dog or your boss is just standing next to you and is telling you, but you have to do ABC. You don't have to trade full time, but find an hour, find 2 hours per day where it's just you and Mr. Market, and get to know each other. I hope that makes sense. Now, quick here on the potential short side. When would I consider selling a contract? Well, if I think that price within the next 30 minutes and 11 seconds might be dropping below 2,613 points, which is some way down here. Do I think it's realistic within the next 30 candles that are being printed here for price to drop here to this level? No, I don't think so. But if you think that might happen, let's be a little bit more conservative here, 2,614. You could be looking into selling that contract. Risk management is just the same thing. If I'm selling one contract here, my maximum loss is $11.75. Why? I'm selling this contract now for 88 bucks. And if the market closes above the strike price, and it's rather likely to do so because it's currently way in the money, then I will just have to settle the difference for 100. So I just have to risk, I have to pay 12 bucks. So that's my maximum loss. I know that upfront. Next thing, I want to risk 200 bucks on that trade, and I'm just clicking those numbers up again until I see, all right, if I was to trade 18 contracts, my maximum loss would be this, my maximum profit would be much larger. Again, yes, I have to pay attention to my reward to risk ratio, which is awesome on that potential trade. But again, Mr. Market is just telling me here, Philip, you have about just an 8% probability that this will work out. You always pay for a great reward to risk ratio with a very bad probability. You have to find some neutral and middle ground, but that would if you think price is about to go there and that's the way that market could play out, then you would be looking into selling that contract. Nick has a good question. I'm not really sure if you mean by working buy and sell on the same contract. You can manage those positions, which means you can have a position on and you can start to scale out of that position, and I already have resting limit orders waiting to hit your profit targets there, or potential stop losses. But you don't need stop losses per se, because your downside obviously is limited by the maximum loss, which is known upfront. Now more questions. I think we're good. Guys, time is pretty much already over. Just one quick look here at US oil. Remember, the OPEC meeting is on Thursday, I guess, so we might start to see some kind of movement there. That's my perfect setup that I'm looking for. Price is pushing higher, pulling back, giving me a small, somewhat bullish candle in the buy zone. Price continues higher. Now price is just pulling back once again. Remember, trading those markets with a big major news event like the OPEC meeting in 2 days with conventional products is usually asking for trouble. However, you know the downside, the perfectly defined downside here with Nadex contracts. So if you think that this could qualify as a potential long trade, I would be looking for expiry cycles further out in time to settle after Thursday. So the weekly option contract comes to mind. And yeah, in the end, it's always your call. If you think that candle here is bullish enough and close enough to our buy zone, I do not make any suggestions. Personally, I would prefer to see it way farther down here in the buy zone. But that's the same picture all over again. And we have cleared that area of support and resistance here. And that uptrend currently here seems to be going pretty well. A little bit of warning sign. Yes, once again, we see here a little bit of divergence setting up. Not as pronounced and not as crucial as if it was a momentum breakout trade. Guys, we are already over time. I'm very sorry about that. Yeah, that's pretty much it from me for today. Susan is asking about our advanced webinar. Yes, my understanding is that once you've opened that account, you can definitely attend those webinars here, which we are starting just next week. Live webinars, just like today. Our advanced course, where we teach the ins and outs of our strategies, the setups, and risk management, and everything that goes with it. And Susan, if there are any questions considering the account process and opening process and anything, we have here several ways to be in touch with the good guys at Nadex. Shoot them an email address, visit the homepage, and by the way, those 14 days demo accounts, that information is outdated. Those demo accounts, once you've signed up, they are good forever. And I think it's a perfect way to learn how to trade on the platform, get a feeling for how those contracts work, and yeah, just get started there. All right, guys, thank you very much for the great questions and the great feedback. I really appreciate the feedback and doing those sessions in an interactive way. I think that's how we are able to learn and grow most. As I've said, that's the end for today. Thank you very much for tuning in. Hope to see all of you and some friends as well on next week's Nadex Advanced Education course. And yeah, any further feedback during the survey is really appreciated. And now, thank you very much for attending once again. And now to all of you, a very great day. Happy trading. Take care. And yeah, looking forward to catching you.